What are the figures and the other results out this week? Tell us about the state of the global economy. Joining us now live from Brussels is Philippe Gijsels, Head of Research at Fortis Global Markets. Philippe, good morning. Thank you very much for joining us. Those Credit Suisse results, bang on the nail. What's your immediate reaction?
Well, not too much of a surprise, a little bit better than expected, strong in the credit market where they have a strong position. Not a big surprise after the figures we saw from JP Morgan and others, so it's completely in line. Banks are benefiting from two big things. First of all, in the traditional side of banking, you still have the very steep yield curve where they're making a lot of money. And secondly, credit or bond market has been quite buoyant, quite a bit of emissions, so that's also been a driver for profits. So it's clear that that's the case for almost all the banks, so Credit Suisse is no exception to that.
So good times for the banking industry on both sides of the Atlantic, but I suppose investors will want to ask, Philippe, how long is it going to last?
Well, that's clearly the important point. And like I said, these two drivers, they're very exceptional because the yield curve is only this steep because short-term interest rates have been exceptionally low for a long period of time. And secondly, this bond market has been very buoyant because there is so much issuance of debt as well. So these are two things that are not going to last forever. And then you will have, as a bank, have to make money in the traditional way. Once again, this will be more difficult. So, and add to that still some write-downs to come, more regulation to come. So in the next couple of years might be difficult for the sector.
Regulations on the tip of everybody's lips. Obama speaks to New York's Copper Union today. How much could regulation hinder banking profits and activities going forward, Philippe?
Well, it is very difficult to put an exact figure to that, but I think it could be quite substantial because if we put this in the larger scheme of things, we come out of a world of deregulation for about 20-25 years where rules got easier all the time and the opportunities to make money were abundant. Now you go to a world where the banking sector and also other sectors will be more and more regulated, which means that the opportunity for profits will just decrease. And at the height, banks were able to make about 16% return on equity. Well, I think we will go more to 7, 8, 9% or something like that. And this also means in the longer run, probably a lower valuation for the sector.
How are you feeling about equities in general, Philippe? I mean, stocks down yesterday in Europe, down in Asia today. I mean, where are we right now in this cycle?
Well, we have two positive things going at the moment. Economic figures continue to come in quite well, and then the earnings season is very strong for the moment. For the S&P companies, 82% have beaten. But I guess quite a bit of the good news is already in the prices, and that you saw yesterday and the day before yesterday, where most companies beat estimates, but companies like an IBM and a Johnson & Johnson, which published very good figures, saw sort of the buy the rumor, sell of the news effect. And if this continues, I guess we're very close to some sort of at least an intermediate market top.
It seems, though, that equities are able to shrug off bad news fairly quickly. Does that tell us that there's a lot of money behind this market?
That's clear. There's a lot of liquidity and there is also a lot of fear to miss out on the rally. If you go back to March 2009 when we saw the bottom in this market, everybody was underinvested, so everybody for the entire year of 2009 had to catch up with the market, and this is still continuing, so the fear of being left behind is very big. But that also means that there is quite a bit of complacency in the market because you still have all the problems surrounding Greece, sovereign debt and so on, and in the meantime you have the VIX, the volatility index, the fear gauge being so low, so this means that people are not very fearful of what's happening, and still there are quite a bit of big problems around, so that worries me, and that could create quite a bit of a shake-up.
Greece, as you say, it's already a massive story in Europe. I mean, could it blow out even bigger, Philippe? I mean, we're worried about speculators possibly going against the likes of Portugal and Spain. I mean, Greece has got a big budget deficit to wipe out. I mean, there's a lot of hurdles for the Eurozone ahead, aren't there?
That's clear. That's absolutely clear, and there is certainly a very big risk that this will spread to other countries. And the Greek situation is not resolved by any means, because now the package of 45 billion is on the table. Some people are already saying, like waiver from the ECB, that should be 80 billion. But if you were to move to Spain, that's 5 times bigger. So if you were to do a rescue package, also of about 20% of GDP, similar to Greece, you would be looking at 200 billion, of which Germany would have to put up 40 billion, which means 1.3 or 1.5% of a GDP, and that will be an extremely hard sell to the voters. So I'm very worried that this is not over yet.
Philippe, speak to you soon.